The Nasdaq and S&P 500 end losing streak to record their best week since November as stocks rally on encouraging inflation data and strong earnings from big tech companies. Asian markets trade mixed despite a strong handover from Wall Street. The GIFT Nifty is also suggesting a higher start for the Indian market. We talk about development, but the Congress talks of looting your inheritance, says PM Modi on the issue of wealth distribution. Speaking exclusively to CNBC TV18, he also says that the concept of inheritance tax is an urban Naxal thought process. The Prime Minister also criticizes the Congress manifesto, saying it flouts the Constitution and is an insult to leaders like Ambedkar. Maruti reports a mixed fourth quarter as margins and operating performance misses estimates. HCL Tech reports muted revenue growth in line with estimates, but growth outlook for 3 to 5% for FY25 is below expectations. ICICI Bank's numbers beat street expectations, but core operating profit growth lags loan growth for the second straight quarter. In key numbers to track, Ultratech Cement is likely to report higher volume but lower realization in the fourth quarter. Also watch for numbers from retailer Trent and Tata Chemicals. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you. Good handover is something that we have from the Wall Street as well. But first up, as always, let's take a look at the Asian markets. After the strong handover that I was talking about from Wall Street, that is something which is reflecting in the Asian markets as well. So the Taiwanese index is up 300 points right now. The Hang Seng is up 132 points. And that's the case across most of the major indices. Something like a Kospi is up around 0.9%. You have Shanghai, which is in the green right now as well. The GIFT Nifty, that'll come up for you on the screen because that one is indicating, well, that the start for our own markets could be in the green. 99 points of an uptick is what the Nifty implied open is suggesting right now. Moving on and talking about the U.S. markets, Wall Street ended higher on Friday. The S&P and the Nasdaq notched their best week since November on the back of strong earnings reported by the big tech companies. Dow Jones also rose over 150 points. For the week, the S&P advanced 2.7%, the Dow Jones edged up 0.7%, while the tech-heavy Nasdaq also gained 4.7%, marking its first positive week in 5. Alphabet jumped nearly 10% and rose to an all-time high after Google's first quarter earnings beat estimates and authorized its first ever dividend. Microsoft gained over 2% after its earnings topped analyst expectations as well. CNBC's Christina Patson-Evelos gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indices on Friday as tech stocks fueled a rally after Thursday's sell-off. The Dow gained 154 points, the S&P 500 added 52, and the tech-heavy Nasdaq, where I am right now, up 316. Yet another crucial inflation gauge remains stubbornly high last month. Core personal consumption expenditures, or PCE, rose 0.3% from February to March, rising at a pace faster than the Federal Reserve's inflation target. The data is expected to reinforce the Fed's hesitance right now to cut interest rates anytime soon. And Secretary of State Antony Blinken announced the U.S. and China will begin talks over artificial intelligence in the coming weeks. The news comes as President Biden recently signed a bill that could ban the popular Chinese-owned app TikTok. Blinken announced the talks after he met with Chinese President Xi Jinping in Beijing. He says they will cover both countries' views on AI safety and concerns and how to best manage them. There was no signal, though, whether TikTok will be part of those discussions, but Blinken did comment that the U.S. crackdown on the app did not come up during his current visit to China. That's what's happening here in the United States. Back to you in Mumbai.
Okay, it's also time to listen into some important opinion coming in from market experts on the March inflation numbers and the overall outlook on the U.S. economy.
What we've been pointing out is that in conversations with clients, I feel like there's been this swing from the world is ending, we're going into a recession, to inflation is out of control, it's stagflation. But there's, 98 or 96% of that bell curve is, all the rest of the scenarios that are more likely to happen. And I think that what investors may not be appreciating is that the economy is actually doing okay. Maybe it's slowing a little bit from last year because of things like fiscal impulse and, other factors. But consumption is still healthy. People are still gainfully employed. The layoff cycle seems like it's not necessarily amplifying. I mean, so far during this earnings season, we've heard some layoffs, but nothing to write home about.
So we came into this week with the S&P. The RSI was about 31, which is proven to be a very good entry point. We also had, if you look at the last 2 weeks of April, post-tax day, seasonally, the last 2 weeks are also favorable. And then, of course, we were looking forward to megacap tech earnings along with the PCE. And, the PCE was something that the market was concerned about. Yeah. I think one of the things happened today. The print, when you look at it on an absolute basis, we think was a hot print. And I think, part of it was expectations that there was a concern that it could come in even hotter than it came in. And then clearly, obviously, earnings from Microsoft and Google were clearly a favorable, dynamic.
Okay, all right, that's the global market action. But how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Happy Monday. It's going to be a busy week for sure. But Hormaz, let's talk about all the cues that we need to keep on our radar today.
Morning, Sonal, and the good part is that it's a truncated week, so even if it's a busy Monday, we'll take that as a bargain. But coming back to the markets, though, it was a slightly lower session on Friday, but we were up for 5 straight days, so a bit of a breather that the Nifty has taken as of Friday's trading session. We recovered almost around 600 to 700 points through the course of last week from last Friday's low, which was 21,777, and 22,600 is now a barrier for the index because Thursday and Friday's high were similar, almost around the 22,620 to 625 mark. We reached those levels, we couldn't sustain above them, but then we corrected from those levels as well. But the good part is that the index is making higher highs across throughout last week. Started off at around 22,300, then went to 22,400, then 500, and eventually now 22,600 is the latest barrier for the Nifty. The institutional selling continued from the foreign investors' desk. Then FIs were heavy sellers all through the week, but the domestic institutions continued to offset that losses. Domestic institutions have bought nearly 40,000 crores worth of equities in the month of April. So that is a good bit. The market, though, is making one thing very clear, that good earnings and management commentary is getting disproportionately rewarded, as we saw in the case of Tech Mahindra on Friday. The earnings may have been okay, but the management commentary was good. But on the flip side, the slightest error and is getting punished. And we saw that in the case of Bajaj Finance when it came to management commentary as well. We can see similar reactions in today's session as well from ICICI Bank and HCL Tech. Some earnings reactions, Yes Bank and RBL as well. And all eyes on the globe will be on the Fed. The Fed meet outcome this week. The GIFT Nifty, as we speak, is indicating a gap up start for our own markets. Back to you.
It is, and it's going to be an earnings-heavy week yet again. Thank you, Hormaz, for all those cues. But let me go across to Vamakshi. We spoke about certain stocks. She has the entire list. Good morning.
Well, good morning, Sonal. Let me first start off with Maruti. The company reported its numbers and revenue saw an uptick of almost 19.3%. Margins have expanded on a year-on-year basis to 12.2%, while net profit has come in nearly 48% higher. But nevertheless, it is a mixed bag as far as the consensus estimates is concerned. ICICI Bank, the numbers have beaten the poll. NII is up nearly 8.1%. The net profit has managed to rise by 17.4%. HCL Tech has reported numbers below estimates. The CC revenue growth came in at 0.3% as compared to our poll of 0.4%. Margins have contracted sequentially to 17.6%, and as far as FY24 guidance is, it's come in at 3 to 5% growth on a year-on-year basis as compared to our poll of nearly 5 to 7%. Shakti Pumps, a strong set of numbers from this counter. Net profit has risen from just 2 crores to 90 odd crores. Margins have also expanded from 6% to 21.5%. SBFC Finance, AUM is seeing an uptick of almost 38% year-on-year. Net interest income has managed to rise by 53%, and the NIMs have also expanded for this counter both on a year-on-year as well as sequential basis. Apollo Hospitals, Apollo Health Co. is expected to raise nearly 2,475 crores from PE firm Advent. They will be merging Kaimed, promoter-owned wholesale pharma distribution business, over the next 24 to 30 months. Irida will also be another stock that we will be watching out for, and that is because the company has been granted the Navratna status from the Department of Public Enterprises.
Okay, all right. So that is the list of stocks in focus. Thank you so much for that, Vamakshi. Finally, Sudarshan is joining in with all the cues from the F&O space. Hey, morning, Sudarshan.
Morning, Sonal. So first of the May series saw some cool off with Nifty and Nifty Bank reversing some of their previous day's gains. But it's not much of a concern as mid-cap index has scaled fresh record high. Talking about the flows in the cash market, FI sold shares of nearly rupees 3,500 crore and DIS bought nearly rupees 4,400 crore worth shares. But if you look at the index future, On the very first day of the series, FI sold shares of rupees 2,000 crore and they have added around 22,000 longs, and against that they have added shorts of more than 68,000. So what it does is FIs had started this series with their long exposure at 39% and 53,000 net short contacts, but because of them selling shares of rupees 2,000 crore on the very first day of the series, their long exposure has now dropped to 35% and net short contacts nearly doubled to 1 lakh. This is important as it tells us that if market does not fall much, FIs will be left with no options but to cover their positions. If you look at the options data, it does reflect some congestion on the way up. 22,500 call has seen some writing with premium currently around 125, and even 22,700 call has seen some writing for which the premium is currently at 48. So people writing 22,500 call is expecting resistance around 22,650, and those who are writing 22,700 call is expecting resistance around the record high levels, or say 22,750. On the way down, support for Nifty is around 20-day moving average of 22,400, and if it breaches that level, next support is 50-day moving average of 22,235. And for Nifty Bank 2, the support is at 20-day moving average of 47,940.
Okay, all right. Thank you guys for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, ICICI Bank, HCL Tech and Maruti Suzuki will be in focus after reporting their fourth quarter earnings. We'll get you the analysis on the other side. Welcome back. You're still tuned into Power Breakfast, and this is our earnings corner. Let's talk about all the stocks that will be in focus and that came through post-market hours on Friday and over the weekend. First up, ICICI Bank reported quarter four numbers that beat estimates. Abhishek is joining in with the analysis.
Looks like a mixed quarter coming in from ICICI Bank. The expectation was of a weaker quarter, and it has actually slightly beaten those weak estimates as well. However, core operating profit, that growth remains softer than the loan growth for second quarter in a row. So take a look at loan growth. On a YY basis, it's the weakest in last 12 quarters, and on a sequential basis, it's the weakest in last 11 quarters. Operating profit growth of just 8.8% YOY is perhaps the weakest in last 11 quarters. Cost to income ratio is at 5-quarter low, coming in at 39.22%. Asset quality, gross NPA ratio and net NPA ratio are one of the best or the lowest that you are seeing in last 9 to 10 years or even more. Deposit growth is at 12-quarter high, coming in at 19.6% YOY, and 6% sequential growth is also at 12-quarter high. Subsidiaries PAT has crossed the 2,000 crore mark on a quarterly basis. This is the highest ever subsidiaries profit that you are seeing, thanks to ICICI General as well as ISEC this time around. Risk weight assets to advances ratio, they are at 9 to 10 year low at 102.9% versus 114.9% in the previous quarter. In terms of P&L, they have beaten our weak poll. The NI has come in at 19,093 crore. We were working with a number of 18,988 crores. However, PAT has come in at 10,707 crores, and that is to the fact that provisions have declined massively by almost 31.5% sequentially, and that's helped the PAT this time around. Back to you.
Okay, all right. That is ICICI Bank, but in more earnings, Maruti also reported a mixed bag of quarter four numbers. The margin missed the estimates. However, revenue growth remains strong. Sonia is here with more on the earnings fine print. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it is the earnings miss on the margin front, which is something that will disappoint the street, and perhaps you could expect the stock to open in the red as well. So quickly to take you through the numbers, the operational performance was marginally below what the street was expecting. The margins came in at 12.2% versus the CNBC TV18 poll of 13.4%. The revenue growth was quite strong, actually. Almost a 20% growth is what we saw on the top line, coming in at 38,235 crores. The net profit growth was also quite healthy. Brokerages are a bit mixed after the numbers this time around, specifically because the stock has rallied substantially, so maybe some profit taking is what you could see. Nomura has a neutral with a target price of 12,523. They say that despite strong tailwinds that the company has, the Q4 margins were a miss this time around, and the market share may face a risk in FY26. UBS has a buy with a target price of 14,000. They talk about how the margin miss is led by lower CNG sales this time and higher costs, but in the longer run, that's not a major concern, according to them. Hence, they continue to maintain a buy on the stock. Back to you.
Okay, all right. Thank you so much for that, Sonia. But the last one on our radar today, IT giant HCL Tech reported their Q4 numbers as well. Revenue came in line with estimates, but the growth outlook is lower than expectations. Reema is here with the key earnings highlights. Reema.
Thanks so much for that. So it's a muted quarter for HCL Tech this time in Q4, but the street is disappointed by the FY25 guidance. So first on the Q4 numbers, revenue growth is just 0.3%. Margins have declined by more than 200 basis points on a quarter-on-quarter basis at 17.6%, missing street expectations. But here's the biggest disappointment. The company is guiding for only a 3 to 5% revenue growth in FY25 versus street expectations of 5 to 7%. The company said two key reasons for this guidance. One, they're saying Q1 will see a revenue drop of 2% because one large project or deal is moving offshore. Typically, when a project moves offshore, the revenues are lower. And secondly, in Q2, there will be an additional headwind of 80 basis points due to State Street. There was a BPO JV which they exited. There will be a negative impact on the revenue. So growth for the company will be back-ended. But HCL Tech will be one of the few companies where FY25 revenue growth will be lower than FY24, and the street is disappointed. Jefferies has cut the target price to $13.90. They have a hold rating. They say weak growth caps the upside, but high yield limits the downside. Kosdaq is now saying in FY25, the company will do a 4.9% revenue growth. Earlier, they were anticipating a 6.8% top-line growth. Kosdaq too has cut the target price to 1,600. And for Nomura, the target price is lower to 1,400. Back to you.
Okay, all right. Thank you so much for that, Reema. In fact, we'll have the management of HCL Tech joining us today at 9:30 a.m. to discuss their fourth-quarter earnings, outlook, and more. So stay tuned to CNBC TV18 for that discussion. We'll slip into a break. Up next, we get to the cues from the commodities market, so stay tuned for that. Welcome back. Let's talk about the big exclusive interview now. Prime Minister Narendra Modi sat down with Network 18 Group Editor-in-Chief Rahul Joshi and News 18 Network's Vilas Bare and Hari Prasad and discussed a slew of issues making news this electoral season. He spoke about the controversy around the inheritance tax and wealth distribution. Listen into excerpts from that exclusive conversation.
सैम पिट्रोडा जी ने जो है इनहेरिटेंस टैक्स की बात की, जो हम लोगों की जमा पूंजी है, जब हम अपने लोग पूरा बचाते हैं अपने फैमिली के लिए, जब हम उसको अपने आने वाली जनरेशन को देंगे तो उस पर भी टैक्स लगेगा और ये टैक्स बहुत बड़ा टैक्स हो सकता है. तो क्या आप कहेंगे कि बीजेपी अगर आएगी तो इस टैक्स को कभी नहीं लागू करेगी?
भारतीय जनता पार्टी क्या करेगी, हमारे मैनिफेस्टो में साफ हमने लिख करके लाए हुए. अब उन्होंने कहीं सगुफा छोड़ दिया तो मैं भी वो झंडा लेके घूमूंगा, ये सवाल आपके मन में कैसे आ जाता है? भारतीय जनता पार्टी की विचारधारा साफ है जी. हम अपनी विचारधारा के आधार पर कार्यक्रमों को लेकर के, मैनिफेस्टो को लेकर के देश के सामने जाते हैं. कृपा करके ऐसे महाशयों के विचारों को हम पर मत थोपिए भाई.
मोदी जी, राहुल गांधी ने एक बात और कही है. वो कहते हैं कि जब वो सरकार अगर उनकी आएगी तो वो एक नेशनल एक्सरे कराएंगे. इसी से जुड़ा सवाल है, इसीलिए मैं पूछना चाह रहा हूँ. एक नेशनल एक्सरे कराएंगे. बात सिर्फ कास्ट सेंसस की नहीं है जो कि वो करते आए हैं, उस पर भी मैं आपका मत जानना चाहूँगा. मगर बात वो कहते हैं इससे आगे है. बात कास्ट की नहीं, बात जस्टिस की है. और वो कहते हैं कि हम जो है एक सोशियो इकोनॉमिक सर्वे लाएंगे, एक इंस्टीट्यूशनल सर्वे लाएंगे और उसमें देखेंगे कि किसके पास किस जाति और किस उस वर्ग के पास क्या है, कितना धन है, कितनी इंस्टीट्यूशंस में भागीदारी है, और उसके बेसिस पर हम इस पूरे सिस्टम को रीडिस्ट्रीब्यूट करेंगे. इसको आप कैसे देखते हैं?
सबसे पहले तो इस देश में जो लोग अपने आप को राजनीति के एक्सपर्ट मानते हैं, जो लोग देश के उतार चढ़ाव को बड़ी बारीकी से अध्ययन करते हैं, सबसे पहले उनका दायित्व है कि वो ऐसे लोगों को पूछे कि जिस परिस्थितियों का वर्णन आप कर रहे हो, अगर ये सही है तो 50, 60, 65 साल तो आपने राज किया भाई। ये मुसीबत के जो जन्मदाता आप हो, और आपने अब तक ये बर्बादी लाई क्यों? पहले उनका जवाब मांगो भाई। नंबर 1। नंबर 2, एक्सरे का मतलब क्या है जी? मतलब हर परिवार में जाना, घर घर छापा मारना, अगर किसी अनाज के डिब्बे में किसी महिला ने अपने गहने छपा के रखे हैं, उसको भी एक्सरे किया जाएगा, उनके गहने ले लिए जाएंगे, जमीनों का हिसाब किताब किया जाएगा, और फिर उसको रिडिस्ट्रीब्यूट करेंगे। ये दुनिया में एक माओवादी विचार ने सब किया हुआ है। दुनिया बर्बाद हो चुकी है जी। ये पूरी तरह अर्बन नक्सल उस सोच का सीधा सीधा प्रगटीकरण है, और इसलिए मैनिफेस्टो आने के 10 दिन तक बाद भी ये जो जमात आए दिन लिखापट्टी करती है ना, वो चुप रही, उनके प्रोटेक्शन में चुप रही है। तब मिलके मेरी जिम्मेवारी बन जाती है कि देश को जगाना कि भाई देखिए आपको लूटने की ये तरकीब हो रही है। और दूसरा पार्ट है, डॉक्टर मनमोहन सिंह जी वगैरह उन्होंने हर बार कहा है कि भाई जो भी संपत्ति होगी इस पर पहला अधिकार किसका होगा। तो हिसाब किताब बहुत साफ है, वो क्या करना चाहते हैं।
And you can tune into the entire conversation with the Prime Minister at 9 p.m. tonight on CNBC TV18 and Network 18 channels. With that, let's move on and talk about all the update that's coming in from the commodity space. Manisha Gupta is joining us as always. Hi Manisha, good morning.
Morning, and thank you for that. Well, I'll start with the precious metal prices, where we have snapped 5 weeks of gains because of dollar strength. And this week as well started slightly on a weaker note. Well, the markets are reacting to the U.S. inflation data at 2.7% versus the expectation of 2.6%, and much higher than the 2%, which is the target for the U.S. As a bankers. But the markets also will watch out for the U.S. monetary policy decision that comes in this week. And the China PMI number is something that the street will also react to. It's not just gold, but silver also has seen a 7% of decline in the previous week. The crude oil prices, after declining in the previous week, have started this week as well on slightly negative point. The only thing that continues to do well even now is the metal as a sector. We're looking at zinc holding around its one-year high, trading very close to $10,000 a ton. Prices are at a 2-year high, up 13% in April. Markets are looking at very strong hedge fund positioning continuing in case of metal prices right now. So even if it's iron ore, which continues positive, steel prices are trading in positive in the Asian markets as well. So metal as a sector continues to do very well.
Okay, metals continue to do very well. Thank you so much, Manisha, for joining us. Staying with commodities, the Secretary General of the OPEC says that the oil prices remain at high levels due to lack of investments. Also spoke about the inflation trends. Let's listen in to that conversation.
If prices are to remain elevated, it's because of the lack of investments that are unfortunately still being pushed by certain quarters and certain circles. We've had higher oil prices in the past. Again, we don't target a price level. I want to be absolutely clear. The market is what determines the price. And there's also an important factor is that we are seeing a trend where inflation is actually going down. Yes, it will go up and down. There might be blips on the road, but the actions being taken by central banks all around the world have really, to a certain extent, I think, caused inflation to go down, where it's now getting to more appropriate levels. I don't really take that argument when it's all pinned down on oil or on energy prices causing inflation.
Okay, let's move now on to some weather updates. No respite from soaring temperatures as the Met Department states warns of severe heat wave conditions that will persist in the upcoming days. Heat wave conditions in Odisha have been prevailing since mid-April, with temperatures soaring to 44.6 degrees Celsius in Bhubaneswar. Heat wave conditions in West Bengal is predicted to worsen, possibly raising the maximum daytime temperatures in the majority of the region's districts as well. So stay hydrated and take care. But for now, we'll take your leave on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call comes up next.